Buying a house is the greatest financial decision most Americans ever make. That's what we're told. Build equity. Stop throwing money away on rent. The American dream. A tangible asset, a place to put your stuff and feel stable and maybe grow vegetables in the backyard that you'll tend enthusiastically for 2 weeks and then abandon. And here's the thing. Owning a home can be a great financial decision. It genuinely can. But for many first-time buyers, it becomes the most expensive lesson they've ever learned. There is a version of this conversation that nobody has with you before you sign those papers. A version that covers what a house actually costs to own once the champagne is flat and the keys are in your hand and the reality of being solely responsible for a large, aging, complicated structure sets in. Today we're having that conversation. Welcome back to the economics of ownership. Let's start with the number that surprises first-time buyers more than any other: closing costs. You've saved your down payment. You know your mortgage payment. You feel financially prepared. Then someone hands you the closing disclosure and you discover you owe another 2 to 6% of the purchase price in fees before you get the keys. On a $400,000 home, that's $8,000 to $24,000, in addition to the down payment. Due at closing, in cash. According to Lodestar's 2025 data, the national average closing costs for a single-family home purchase are $4,661, and that doesn't include real estate agent commissions. Factor those in, and you're looking at total transaction costs that can run 8 to 10% of the purchase price between buyer and seller combined. Title insurance, loan origination fees, appraisal fees, prepaid property taxes, prepaid insurance, recording fees. They each sound reasonable individually. Together, they make your move-in date feel like a second down payment. First-time homeowners, what closing costs surprised you the most? Drop it in the comments. And if you're still renting and this is news to you, drop that too. I want to know how widely this information is not being shared before people buy. Quick pause. If you want more honest, numbers-first breakdowns of what things actually cost to own versus what we're told they cost, subscribe. We've done EVs and now houses. Many more episodes are coming, and they won't disappoint. Hit subscribe. Okay, back to the house. Here's the number that financial planners know, and nobody tells buyers. You should budget 1 to 3% of your home's value every single year for maintenance and repairs. On a $400,000 home, that's $4,000 to $12,000 per year, just to keep the thing standing. And that's the normal year. The year where nothing catastrophic happens. The year where you're just replacing filters, servicing the HVAC, cleaning gutters, patching the driveway, and doing the 100 small things that a house demands of you with the quiet persistence of a very needy roommate who never pays rent. The not normal year is when the roof goes. Average roof replacement, $9,000 to $12,000. The water heater dies, $1,000 to $1,500. The HVAC system gives out, $5,000 to $12,000. The foundation develops a crack that requires a specialist, and a number that makes you briefly consider arson. According to a 2025 survey, 81% of homeowners say the costs of homeownership are higher than expected. 81%. That's not a small slice of unlucky people. That's a systemic failure to communicate what owning a house actually involves. The older your home, the more brutal this gets. Homes built before 2010 average around 5% of home value annually in maintenance costs. On a $400,000 older home, that's $20,000 a year. You are running a small maintenance business. You just don't know it yet. Homeowners insurance used to be a predictable, boring line item. It is no longer boring. The average annual homeowners insurance premium in the U.S. is now roughly $2,400 to $2,800, depending on which data source you use. And that average is being dragged upward aggressively by high-risk states. According to the Consumer Federation of America, homeowners insurance premiums rose 24% between 2021 and 2024, twice the rate of general inflation. By 2024, the typical homeowner was paying $3,303 per year. In Oklahoma, the average is $4,695. In Florida and Louisiana, it's even worse. And in many zip codes, you're now lucky to find coverage at all. Insurance companies have been pulling out of entire states because the climate math no longer works for them. If you're buying in a high-risk state, wildfire country, Hurricane Coast, Tornado Alley, you need to get insurance quotes before you make an offer. Not after, before. Because in some markets, the insurance premium will change your math on whether the house makes financial sense entirely. And you will not see this coming from the listing photos. Current homeowners, has your insurance premium gone up meaningfully in the last 2 or 3 years? Drop the percentage increase in the comments. I think this is more widespread than people realize, and I want to see the data from real people. Property taxes are the cost of homeownership that nobody talks about because they vary so wildly by location that it's hard to generalize, which is exactly why most people don't find out what they're paying until after they've bought. The national average effective property tax rate is around 1% of assessed home value per year. On a $400,000 home, that's $4,000 annually. Fine. Except in New Jersey, the average effective rate is over 2%. On a $400,000 home, that's $8,000 a year. In Illinois, similar story. In Texas, where there's no state income tax, property taxes pick up the slack. Rates regularly hit 1.5 to 2.5%, and property taxes don't stay flat. As your home's assessed value rises, which it has done aggressively in most markets over the last 5 years, your property tax bill rises with it. You didn't choose for your house to be worth more. You don't get to spend the appreciation, but you do get the tax bill. Let's build the full picture on a $400,000 home with a 20% down payment financed at 7%. Closing costs up front, approximately $10,000 to $20,000, using midpoint of 2 to 6% range. Over 5 years, mortgage interest, approximately $53,000. The bulk of early payments is interest, not equity. Property taxes, approximately $20,000, $4,000 per year at 1% rate. Homeowners insurance, approximately $14,000, $2,800 per year average. Maintenance and repairs, approximately $20,000, $4,000 per year at 1% of value, conservative estimate. 5-year total cost of ownership beyond principal, approximately $107,000 to $120,000. That is not the mortgage payment. That's the money spent beyond the mortgage payment. The money that doesn't build equity. The money that is simply the cost of keeping the lights on and the roof attached. None of this means don't buy a house. Equity accumulation, appreciation, stability, and the psychological value of owning your space are all real. But the stop throwing money away on rent framing conveniently omits that homeownership comes with its own category of money thrown at things that aren't equity. It's just spread across more line items and harder to see. The best homeowners are the ones who went in with the real numbers and decided to buy anyway. Not because they didn't know what it cost, because they did the math, understood the total picture, and made a deliberate choice. That's the version of homeownership that actually pays off. Run the real numbers, include closing costs, budget 1 to 3% annually for maintenance, get insurance quotes before you fall in love with a property, look up the property tax rate, add it all up, then decide with open eyes. Subscribe if you want more of this series. Tesla is next, and the depreciation numbers alone are worth sticking around for. Drop a comment. Are you a homeowner, nodding along, going, yep, found out the hard way? Or are you renting and suddenly feeling much better about your life choices? See you in the next one.